Members, welcome back to our TradeXchange weekend webinar. We're back. A lot of people have asked us to bring these back, so we did bring them back. We never were going to take them away. We just wanted to figure out the best time, best day of doing our webinars. If anyone has any suggestions, please let us know. We hear comments from Saturdays and Sundays, so whatever works best, we want to make sure that we do what we can for our members. So we're back. Quick TradeXchange week ahead webinar. First, let's talk about last week. What a week the Dow has been having. 10 straight days of strength. Typically, we talk about the NASDAQ, which is up over 40%, but this time around, we're talking about the Dow. Why? One of the key aspects, financials. Financials saw strength since the beginning of earnings. The regionals, not many discuss the regionals, but the regionals are showing stability and strength. The big banks as well. All across the board, we saw strength in the XLF, BKX, and you'll see later the strength that we saw in the financial sector, correlating to the strength that we've been seeing in the Dow. The NASDAQ, though, showed a little weakness this past week. Why? Could be the NASDAQ 100 rebalancing. Could be the earnings from Tesla and Netflix. Are they foreshadowing what tech earnings would be? All I know is this week coming up, members, we have one of the most important earnings announcements, in our opinion, for the year. We have Microsoft, MSFT. We'll go through that list of top earnings once we go over our pre-week breakdown. As of right now, members, when it comes to the earnings side, even though we just started, we've done about a week and a half of earnings. So far, 75% of those earnings are beating the income expectation side. We did see some strength this week on the regional bank we mentioned before. That rebound is something that many people have not been discussing. It seems like that is all swept under the rug. No one seems to care about that, but the strength in regionals is an important aspect of what we believe showed strength in the Dow and the S&P. On the retail side, retail sales report rose spot 2% on the previous month, but lower than what economists were expecting. One aspect, though, that many don't discuss is the fact that the sales growth figure from previous months were revised upward, which continues to show retailers are showing resilience in this quote-unquote recessionary, inflationary environment. One thing that slowly, not much has been discussed as well in the past week was headlines out of China. China's economy expanded at an annual rate of 6.3% in the second quarter, which was well below most of the economic forecasts throughout China. So the question comes down to, is China going to be an impact on the U.S. economy? Clearly, market-wise, members, we're not seeing it, but we'll see if that trickles down in the next few weeks to months, if people start talking about China's slowdown and any type of impact it would have on the U.S. economy. We believe when it comes to this coming week, members, you have let's rewind a little bit. As we know, the summer has been very, very slow news flow wise. The morning rush, yes, we get the morning rush. The afternoon, it's like, where has everybody gone? And then at 4 o'clock, 3:30, 4 o'clock, we do get some action into the close and into earnings. This week, though, we believe we're going to have a little more activity in the news flow area as well as volume in the markets. Why? Three things. Big earnings coming this week, members. A very busy economic report for the week this week, members. And we have the Fed, ECB, and the BOJ coming out with their announcements. So that alone is going to show volatility in the markets. When we mean earnings, we're talking about big earnings, members. Boeing, Biogen, Bristol Myers, Comcast, Chevron, Ford, General Electric, General Motors, Alphabet, Honeywell, Hershey, Coca-Cola, MasterCard, McDonald's, Meta, the big one, Microsoft, Roku, Snap, Spotify, AT&T, Texas Instruments, Verizon, Visa, US Steel, Exxon Mobil. Some of the biggest names are reporting this week. Not counting the Fed on Wednesday, the Fed chair presser on Wednesday afternoon, ECB announcement on Thursday, Japan's BOJ announcement on Thursday. And economic-wise, Monday, we have the PMI composite flash. Tuesday, Case-Shiller, FHFA, and consumer confidence. Wednesday, new home sales. Thursday, durable goods orders, GDP data, international trade in goods, jobless claims, and pending home sales. Friday, another key inflationary report, personal income and outlays, consumer sentiment, farm prices, and the employment cost index. That to us sounds like a very busy week. And we'll see if that can correlate into some action in this market. But stay tuned, members, because we got some very crazy activity coming, not just on the earning front, but on the economic side as well. Even though this list has no Fed speakers, it's still a very busy list, members, that we have coming up for this week. Company events for the week, as always, as well as some conferences. Economic members, economic calendar we did mention before. Very busy week all across the board. International-wise as well. A little Fed schedule. Keep in mind, members, the Fed still is in their blackout period into the middle of end of this week. Week ahead TradeX commentary. A big list of earnings, members. Very big list that we got coming up. As always, we bowled out some of the bigger names, and some of these names are not even mentioned in that list ahead above that we have coming. We even have Glaxo, Hess, CME, Mattel, Lam Research, Crocs, Harley. We have a very, very busy week this week on earnings. Your weekly sector performance, first time in a while, members. I think it's the first time this year that we've talked about communication services and consumer discretionary lower this week. Look at that energy, strength, financials, and healthcare. Typically not the ones we talk about on a weekly sector performance. Chart-wise, look at this beauty of the NASDAQ. All across the board, though, members, we are seeing strength. That fear and greed index, extreme greed, been over a few months that this has been in the extreme greed, and we can see it in the markets. Look at this move, members. So it is correlating to the action that we've been seeing in the market. One other thing that we'll be discussing, this AAII Investor Sentiment Survey. This number, 51.4, the bullish mindset, this has been the biggest number we've seen in years. So it's interesting to see that the mindset right now is clear cut to the bull side. Look at this bearish mindset, 21.5%. It's interesting to us that we see these types of informational research data points, yet when we talk about or we see people on media, it's all about the bearish mindset still. So it's interesting to see which area is the correct mindset. Are we watching these sentiment surveys showing that huge bullish activity, correlating it to strength in the markets, and the bearish mindset slowly at one of the lowest levels, clearly, that we've seen in years? We'll see what that correlates into the markets. As we always know, members, you know how that term goes, when there's blood in the streets, it's the time to buy. Maybe when it's this kind of bullish activity, it may be the opposite mindset. We'll see what happens in the next few months in this market. Year-to-date return. One thing we wanted to discuss that a lot of people are not discussing is the impact commodities have on the market, on inflation, on the day-to-day activities. Look at orange juice, one of the 45% on the year, up over 13% from last week. Cocoa, up 31%. Sugar, up 25%. Gasoline, up 13%. Lumber, up 10%. Gold, up 7.5%. Silver, up 3%. One thing that we noticed when we looked at that CPI report the previous weeks is the fact that gasoline was down, 24, 23, 25%, around upper 20s. We're slowly starting to see gasoline start to uptick this year. We'll see if that has any impact in any future markets. But it'll be interesting to keep a close eye on going into more of these CPI reports. As always, nat gas has been the laggard all year long, still down about 40%. Heating oil, the same thing as well, down 18%. We did see a little uptick off those Russia headlines, but still down 12% on the year. And that VIX, is there a volatility index anymore? What are you even going to say about that? The VIX down 38% year to date. Sector outlooks, the top three, still the top three: information tech, communication services, consumer discretionary. Your FDA calendar for the week, IPO lockup expirations, expected IPOs. Now a few charts, members. Going over these, as always, we give a breakdown. Members, as you all know, whenever we mean no changes to the chart, we mean no changes have been made to this chart. No changes to the chart. This downtrend that was here is clear-cut technical. Once it was broken to the upside, we saw an upside move breaking above resistance. Now we're in this range of the 2000 to 1950s. Watching 2000 upside, 1950 short-term support, I guess you can call it, with a 1900 very key level, downside level on watch. NASDAQ, no changes to the chart, members. Once we broke above that resistance level that was there for weeks ago, we saw strength like we've never seen strength before in this NASDAQ, bumping this level up almost, 700, 800 points in a couple of weeks. One key comment we mentioned last week, though, if everyone reads our commentary, we mentioned that one thing, though, the members, the first time in a while in the NASDAQ, we saw a bearish reversal to end the week last week. We ended the week lower than NASDAQ for the first time in a long time this past week. Could it have been off of that? Who knows? But we did see that weakness coming. Watching support levels here, which is very key. 14,500 members. If you go back years, you'll see a very strong resistance level at that 14,500 level. Watching very closely on that. SPY daily, triple Q, IWM 10-year yield, 10-year year breakdown. Not much action, members. Once the support resistance level was broken, we saw huge move, breaking back down below support, right back to this level of resistance support level. Watching this very closely, members. 4% upside, 3.8 right here level, very tight for that key level down here around the 3.5 to 3.6%. Diamond daily, IWM, members. Last week we mentioned the strength we've been seeing on the IWM and the volume that backed it. We are watching as a base at these levels is trying to be built, very similar to previous levels. Watching it very carefully. Are we going to see a base in the drop or a base in a breakout to the upside? Watching IWMs very closely. HYG daily, S&P 500. No changes to the chart, members. S&P 500 continues to trade above resistance and above the uptrend. 4,500's downside on watch for the possible support trend line break right at this level. We're watching this very closely because this uptrend has been tested a couple of times. So we're watching this level closely for a possible break to the downside. But for right now, 4,600, if you go back on a longer term chart, members, you'll see 4,600, a key level on the upside resistance. VIX, we might as well take the VIX chart off the map because it really doesn't move. Oil, no changes to the chart. This trend line has been in place for quite some time, members, as everyone who sees these charts knows. And it was touched 1, 2, 3, 4, 5 times. Once it was broken, we saw an upside move around $7 to $8. Last week we booked a downtrend. and strength continued. We mentioned that we should see a base being built at support and bull. We are watching for a possible move back to $80 with volume, and a volume break below 75 could be traced back to the 70s. So we're watching this level very closely. We're trying to build something here, and we're waiting for either a move to the upside back to 80s or a downside break of this level back to the 70s. US dollar. No changes to the chart. Last week, we added this downtrend. And we mentioned with this sharp downtrend, if a break happens, it could be a sharp run up. What did we get? We got a break of the downtrend and a sharp bounce back up. Watching, since we landed right at resistance, watching this level. This is a key resistance level, members, going back some time. So we can see, if we can see a break here, we can see easily 102 back into this range, and then we're back into the play of the 102 to the 101, and then the 100 key level on the US dollar. Bitcoin, the chart alone explains it. This chart has been in play. These lines, trend lines have been in place for months, and we ended right on support. Watching the support level very closely. If this thing breaks, members, we have a very big drop that we can see, especially around the 26 to 28,000. But that upside, 32,000, is needed for the continuation move to the upside. SMH, and lastly, the euro. No changes to the chart. We discussed a few possibilities last week in the euro. We mentioned how we needed volume to confirm this move. We did not get that volume in the euro, this area. We mentioned to watch for a retrace back to support our trend levels. Basically, retrace back to this trend level, back to support at this point. Watch closely as we wait this range belt now. We have 112 to 113 on the upside, 110s on the downside. Watching it close as it correlates with the dollar, especially with the Fed this week and the ECB later on this week. So members, as you can see, chart-wise, markets continue to be range-bound. But this week, we have a very busy week coming with the economic data. We have central bank decisions from the US, Japan, and Europe, the ECB. And we have a slew of very, very big earnings reports coming this week. Members, we're glad to be back in this weekend webinar. Once again, if you have any suggestions on a timetable, weekends, Saturdays, Saturday mornings, Saturday afternoons, Sundays, let us know. We'll be more than happy to accommodate as many as we can. And thank you for all the feedback in regards to the webinar, bringing it back. We appreciate all the feedback, the good, the bad, the ugly. Let us know. We're trying to always make a product better for our members to make their trading day easier. And that's what we're here for. If everyone knows us, you know, if you send us an email, send us something, we reply back as fast as we can, because we believe you guys make our product better. Thank you, everyone. Enjoy. Make sure to check the news desk to get yourself ready for Monday. Make sure to join us first thing Monday morning for the TradeXchange pre-market prep. Thank you, everyone. Enjoy. Be safe. Enjoy the rest of the weekend. TradeXchange out.